Robert Kiyosaki begins the book with a simple but powerful statement. I wanted to be free. Not rich for luxury, not successful for recognition, but free. This chapter sets the emotional foundation of his entire financial journey. Freedom, for Robert, meant having control over his time, his money, and his life. He recalls being frustrated in his early years, working hard yet feeling trapped by the system, a cycle of earning, spending, and debt that most people accept as normal. Robert and his wife Kim made a life-changing decision in 1984. They would stop working for money and start working for freedom. It was not an easy choice. At the time, they were broke, living in a small apartment, and even sleeping in their car at times. But they made a commitment to never go back to the security of a paycheck. This is where Robert introduces one of the book's key principles. Your reason must be stronger than your reality. He explains that everyone dreams of being rich or financially free, but few people have a strong enough why to push through the struggles. For Robert, his why was crystal clear. He wanted to live life on his own terms. That desire became his internal fuel. He learned that financial freedom isn't just about money, it's about courage, mindset, and persistence. Robert shares how his rich dad mentored him to think differently. While most people focus on earning a higher income, Rich Dad taught him to focus on building assets that create income automatically. Rich Dad's words were simple. The poor work for money. The rich have money work for them. In this first chapter, Robert begins to realize that the key to financial independence is learning how to make money flow toward you, not away from you. He also highlights a painful truth. The education system prepares people to be employees, not entrepreneurs or investors. That system rewards obedience, not creativity or risk-taking. Robert and Kim had to unlearn many of the traditional beliefs about work and money, beliefs that had kept them in financial struggle for years. The chapter ends with an empowering message. Anyone can start the journey to financial freedom, but you must be willing to start small, fail often, and keep learning. The first step is mental, shifting from the question, how can I make more money, to how can I make money work for me? Robert closes by reminding readers that freedom begins with a decision. The moment you decide to stop trading your time for money, you begin walking a new path, one that leads to independence, wealth, and ultimately, peace of mind. Key takeaway: you don't need to be rich to start pursuing financial freedom. You need a strong reason, a clear mindset, and the courage to take the first step, just like Robert and Kim did when they chose to live for freedom, not security. In Chapter 2, Robert Kiyosaki takes us deeper into the lessons he learned from his rich dad, the man who forever changed the way he viewed money. This chapter focuses on one crucial idea. Financial freedom comes from understanding how money really works, not just how to earn it. Robert begins by contrasting the teachings of his two dads. His poor dad, his biological father, believed in traditional education, job security, and climbing the corporate ladder. His rich dad believed in financial education, independence, and building wealth through assets. While poor dad said, go to school, get good grades, and find a safe job, rich dad said, learn how money works so you can make it work for you. Rich dad explained that the biggest financial trap most people fall into is the rat race, the endless cycle of working hard, earning a paycheck, paying bills, and starting over every month. It's a system designed to keep people dependent on their jobs. Robert learned that escaping this cycle requires more than just hard work. It requires financial intelligence, the ability to understand the difference between assets and liabilities. Rich Dad's golden rule was simple. The rich buy assets, the poor and middle class buy liabilities they think are assets. He taught Robert that an asset is anything that puts money in your pocket, like investments, rental properties, or businesses. A liability is anything that takes money out of your pocket, like a mortgage, car payments, or credit card debt. The problem is that most people mistake liabilities for assets. For example, they buy a house thinking it's an investment, but it actually drains money every month through taxes, interest, and maintenance. Robert admits that once he truly understood this distinction, everything changed. Instead of working for money, he began building and acquiring income-producing assets. This shift in mindset was the foundation of his journey toward early retirement and lasting wealth. Rich Dad also emphasized the importance of cash flow over net worth. Most people measure success by how much they own, but true wealth is measured by how much passive income you generate. Income that continues whether you work or not. When your assets produce enough cash flow to cover your expenses, you are financially free. Robert learned that money is not the problem. Ignorance about money is. Schools don't teach us how to manage or multiply money, so people grow up financially blind. Rich Dad urged Robert to take control of his own financial education, to read, invest, make mistakes, and learn from experience. The chapter ends with one of Rich Dad's most famous lessons. Money is a powerful tool, but only if you know how to control it. If you don't, it will control you. Key takeaway: the path to wealth starts with financial literacy. Understand the difference between assets and liabilities. Focus on creating positive cash flow. And never stop learning about money. Wealth is not about working harder. It's about working smarter and making money your employee. In Chapter 3, Robert Kiyosaki introduces one of the most important financial lessons from his Rich Dad: the concept of 3 types of income. Understanding this idea is a turning point in his journey toward financial freedom. According to Rich Dad, not all income is created equal, and knowing the difference between them determines how fast you can become rich or how long you stay stuck in the rat race. Rich Dad broke down money into 3 categories: earned income, portfolio income, passive income. Let's break these down through Robert's perspective. 1. Earned income. This is the money you make by trading your time for money, your paycheck, salary, or hourly wage. It's the most common form of income and also the most heavily taxed. Rich Dad called it the slowest and riskiest way to get rich. Why? Because it depends on your physical presence and effort. If you stop working, the income stops too. Robert realized early that most people rely only on earned income, which keeps them trapped in a cycle of working harder but never really getting ahead. 2. Portfolio income. This type of income comes from paper assets, such as stocks, bonds, and mutual funds. It's the income generated when your investments grow in value and you sell them for a profit. Rich Dad explained that portfolio income can help you get rich, but it's still limited by the market and requires understanding financial instruments. It's also subject to capital gains taxes. Robert learned to treat portfolio income as a stepping stone, a way to build wealth. Faster than earned income, but still not the ultimate goal. 3. Passive income. This is the holy grail of financial freedom. Passive income comes from assets that generate cash flow without your active involvement. Rental properties, royalties, or businesses that run themselves. It's the kind of income that continues whether you're working, traveling, or sleeping. Rich Dad told Robert, when your passive income exceeds your expenses, you are truly rich. That one sentence became the core of Robert's financial philosophy. Robert and Kim made a conscious decision to focus their lives on building passive income streams. They knew it would take time, learning, and sacrifice, but once established, it would give them what they truly wanted: freedom of time. Rich Dad also highlighted another crucial lesson: each type of income requires a different kind of education. School teaches people how to earn income, but it rarely teaches how to create passive or portfolio income. That's why financial education is so powerful. It helps you shift from working for money to having money work for you. The chapter closes with a challenge. Take a look at your own income sources and identify which category dominates your life. If it's mostly earned income, start planning how to transition toward portfolio and passive income. That's how you move from surviving to thriving. Key takeaway: true wealth isn't built by working harder. It's built by creating income that flows to you automatically. Learn to master all 3 types of income, but focus your energy on building passive income. That's the path to retiring young and staying rich. In Chapter 4, Robert Kiyosaki focuses on one of the most practical lessons from his Rich Dad: how to transform earned income, the money you work for, into passive income, the money that works for you. This chapter connects mindset, discipline, and financial education into a clear strategy for building lasting wealth. Robert begins by explaining that most people spend their entire lives working for earned income. They trade their time for money, and the more they earn, the more they spend. Rich Dad called this the earn, spend, repeat trap. It's a cycle fueled by fear and desire. Fear of not having enough and desire for more comfort. The result is that even as income rises, expenses rise too, leaving no room for real wealth creation. Rich Dad taught Robert a different approach. Instead of increasing spending when you earn more, redirect part of your earned income toward acquiring assets that generate passive income. That's the bridge between being an employee and becoming financially free. Robert learned that the discipline to invest, rather than consume, is what separates the rich from everyone else. He breaks down the process into 3 simple but powerful steps. 1. Earn income intelligently. Robert emphasizes that your job or business should serve one purpose: to generate capital that can later be converted into investments. It's not about how much you make, but what you do with what you make. Even when he and Kim were broke, they disciplined themselves to save and invest, not spend on luxuries. 2. Use earned income to build or buy assets. This is the core of the Rich Dad philosophy. Every dollar you earn should be treated like a worker. You can either spend that worker and lose it forever or assign it a job to buy assets that produce more money. For example, instead of buying a new car, Robert would use that money as a down payment on a rental property. That property then produces passive income, which eventually buys the car without touching his labor income again. 3. Reinvest and compound your cash flow. Once you start generating passive income, don't rush to spend it. Reinvest it to buy more assets. This is how wealth compounds over time. Robert calls this the velocity of money. The faster your money moves through productive assets, the faster you grow your wealth. Rich Dad also stressed the power of financial leverage. By using other people's money OPM, through loans, partnerships, or investors, you can accelerate the transition from earned to passive income. But leverage requires knowledge. Without financial intelligence, it becomes dangerous. Robert shares how he and Kim applied these lessons early on. They used their limited earned income to buy small real estate investments. Over time, those properties created enough passive income to cover their living expenses, allowing them to retire early and focus on growing wealth instead of working for it. The chapter closes with a warning and a promise. The warning: if you keep spending all your earned income, you'll work forever. The promise: if you consistently convert earned income into passive income, financial freedom is inevitable. Key takeaway: the secret to becoming rich isn't making more money. It's learning how to make your money work for you. Use your earned income as a tool, not a destination. Invest it wisely, reinvest the returns, and you'll eventually escape the rat race for good. In Chapter 5, Robert Kiyosaki delivers a wake-up call. The financial rules that worked for our parents and grandparents no longer apply. The world has changed, jobs are less secure, pensions are disappearing, and inflation quietly erodes savings. Rich Dad's message to Robert was clear: if you play by old rules, you'll lose in the new game of money. Robert begins by contrasting two economic eras. The old world rewarded loyalty, stability, and saving. People worked for one company, retired with a pension, and relied on government programs like Social Security. But those systems were built for an industrial economy, not for the fast-changing, information-driven world we live in today. In this new era, financial education has replaced job security as the key to survival. Rich Dad taught Robert that most people are still taught to go to school, get a job, and save money, but those ideas no longer create wealth. Why? Because the global economy is built on debt and inflation. The government prints money, banks lend it, and the value of currency decreases over time. So when you save money in a bank, you're actually losing purchasing power. Rich Dad would often say, savers are losers, investors are winners. This chapter also dives into one of Rich Dad's most powerful teachings. The rich don't work for money, they create systems that produce money. These systems can be businesses, investments, or intellectual property. Robert learned that instead of chasing a higher salary, he needed to build and control assets that generate cash flow. The new rule of money is not work hard, but work smart in leverage systems. Rich Dad explained that in the new economy, there are two kinds of people: those who are controlled by money, those who control money. The difference lies in education and mindset. People who rely on job income are vulnerable. When the company downsizes or the market crashes, they lose everything. But those who understand how money flows can adapt and thrive. They see opportunity where others see crisis. Robert also highlights how technology and globalization changed the financial landscape. With the rise of the internet, investing, entrepreneurship, and information access became open to anyone willing to learn. That means financial freedom is more achievable than ever, but only for those who take responsibility for their own financial learning. Rich Dad warned that depending on governments, pensions, or job security is financial suicide. Instead, he advised building personal wealth through financial independence by owning assets, controlling cash flow, and continually improving financial intelligence. Robert closes the chapter with a personal reflection. When he and Kim realized the rules had changed, they stopped trying to play the old game. They no longer chased promotions or pay raises. They focused on acquiring assets and creating passive income streams. That mindset shift was the foundation of their early retirement. Key takeaway: the new economy rewards financial intelligence, not job titles. The old rules, work hard, save money, and depend on pensions, are obsolete. To succeed today, you must learn how money truly works, invest in assets that produce cash flow, and adapt faster than the system changes. The people who understand the new rules of money are the ones who will own the future. In Chapter 6, Robert Kiyosaki explores one of the most transformative concepts in wealth building: leverage. According to Rich Dad, leverage is the secret weapon of the rich. It's what allows ordinary people to achieve extraordinary financial results in a short amount of time. Without leverage, Robert says, it's nearly impossible to retire young or retire rich. Rich Dad defined leverage simply as doing more with less. It's about using resources, money, time, people, or knowledge to multiply your results. Most people rely only on their own effort, which limits how much they can achieve. Rich Dad taught Robert that wealth grows when you learn how to use other people's time other people's money OPM, and other people's ideas OP. The poor and middle class often avoid leverage because they see it as risky, but the rich use it intelligently to create freedom. Robert explains that there are four main types of leverage every investor and entrepreneur must understand. Financial leverage: other people's money. This is using borrowed money, such as loans, mortgages, or investor capital, to acquire assets. Rich Dad taught that debt is not bad when it's used to buy income-producing assets. Bad debt takes money out of your pocket, but good debt brings money in. Robert used this principle to invest in real estate. He borrowed to buy properties. That generated cash flow, which then paid off the loans and created wealth. Knowledge leverage. This is the ability to use education, experience, and financial intelligence to make smarter decisions. Rich Dad would say, knowledge is the most powerful leverage of all. The more you understand how money works, the less risk you face. Robert stresses that ignorance is what makes leverage dangerous, not the leverage itself. Time and people leverage. The rich don't try to do everything themselves. They build teams, hire experts, and delegate. Robert learned to create systems where other people's time and skills helped him grow his business. In contrast, people who try to do it all limit their income to the hours they can personally work. Technology leverage. In today's world, technology multiplies productivity. Robert points out that the internet, automation, and digital systems have become powerful forms of leverage, tools that can generate income 24/7. If used wisely. Rich Dad warned that leverage is like a double-edged sword. It can make you rich faster, but it can also destroy you faster if used carelessly. That's why financial education is critical. Before using any kind of leverage, you must understand the risks, control your emotions, and have a solid plan. Robert reflects on his own journey. When he and Kim started, they had almost nothing. But by using leverage strategically, they accelerated their wealth-building process. They didn't rely solely on savings. They used borrowed capital to invest. leveraged partnerships for expertise, and continuously reinvested their profits. The chapter concludes with Rich Dad's timeless lesson: leverage is power, but only for those who are financially educated. For the uneducated, it's danger. Key takeaway: the ability to use leverage effectively is what separates the rich from everyone else. It's not about working harder, it's about multiplying your effort through money, people, knowledge, and systems. When used wisely, leverage is the bridge between financial struggle and financial freedom. In Chapter 7, Robert Kiyosaki shifts the focus from money to learning, the ultimate accelerator of wealth. Rich Dad taught him that the faster you learn, the faster you earn. Financial success, Robert explains, isn't about working harder or even smarter. It's about learning faster than everyone else and applying that knowledge to create value. At the beginning of the chapter, Robert reflects on how most people stop learning once they leave school. They assume education ends with a diploma, but Rich Dad believed that's when real learning begins. The traditional system trains people to memorize and obey, not to think critically or take risks. That's why so many people are financially stuck. They're operating with outdated knowledge in a rapidly changing world. Rich Dad told Robert, if you want to be rich, you must be a lifelong student of money. This means constantly studying business, investing, markets, and human behavior. But more importantly, it means learning through experience, by taking action, failing, and adapting. Failure, Rich Dad said, is a teacher that schools try to avoid but the rich embrace. Robert breaks down 3 levels of learning that shape a person's financial destiny. Learning by reading and listening. This is where everyone starts, through books, seminars, and mentors. It builds knowledge but doesn't build results yet. Learning by doing. This is where growth happens. Real-world experience transforms theory into understanding. Every deal, mistake, and success becomes a valuable lesson. Learning by teaching. The highest level of mastery is when you can explain complex ideas simply and help others grow. Teaching forces you to organize your thoughts and strengthens your understanding. Rich Dad used to say, don't just work to earn, work to learn. Every job or project should be a training ground for future freedom. Robert recalls how, early in his career, he took low-paying jobs in sales and marketing, not for the money, but to learn how to communicate, sell, and lead. Those skills later became the foundation of his business success. Robert emphasizes that self-education is the new leverage. In today's world, the people who learn the fastest can adapt to any financial change, new technologies, market shifts, or economic downturns. Those who resist learning are replaced by those who don't. He also highlights the role of mentorship and networks. Rich Dad taught that surrounding yourself with smarter people accelerates learning. You don't need to know everything yourself. You just need to be around people who do. Successful people invest in masterminds, courses, and coaches, not because they're weak, but because they understand the value of borrowed wisdom. Robert closes the chapter by warning against the employee mindset, the belief that you only learn if someone pays you to. The rich, on the other hand, pay to learn. They attend seminars, read constantly, and take risks because they see education as the ultimate investment with infinite returns. Key takeaway: wealth grows at the speed of learning. The faster you develop financial intelligence, through reading, doing, failing, and teaching, the faster you escape the rat race. Never work just for money. Work to learn. Because the skills and experiences you gain will eventually make money work for you. In Chapter 8, Robert Kiyosaki dives into one of the most misunderstood elements of success: failure. While most people fear failure and do everything possible to avoid it, Rich Dad taught Robert that failure is not the opposite of success. It's part of it. In fact, the ability to turn failures into assets is what separates those who get rich from those who stay broke. The chapter begins with Robert recalling the countless mistakes and financial setbacks he experienced on his journey to financial freedom. He and Kim went broke more than once. They lost money on bad deals, made poor decisions, and even lived in their car at one point. But instead of quitting, they used every failure as a lesson. Rich Dad had told him, the difference between the rich and the poor is how they handle failure. Most people are trained to see failure as something shameful, a sign of incompetence. This conditioning starts in school, where mistakes are punished rather than analyzed. Rich Dad believed this mindset destroys creativity and confidence. He taught Robert that mistakes are feedback, not final verdicts. Each one reveals what you still need to learn to move closer to success. Robert explains that every great success story is built on a foundation of failures. The key is emotional control, learning how to manage fear, embarrassment, and self-doubt when things go wrong. Rich Dad used to say, if you let fear stop you once, it will stop you forever. The rich aren't fearless. They've just trained themselves to keep moving forward despite fear. In practical terms, Robert shares how he learned to convert mistakes into money-making wisdom. Every failed investment or bad business deal taught him valuable lessons about risk, negotiation, market timing, and financial leverage. Over time, those lessons became assets, mental assets that allowed him to make smarter, more profitable decisions. He also points out that fear of failure keeps most people working for others. Employees prefer security over risk because they can't handle uncertainty. But entrepreneurs and investors understand that failure is the tuition you pay for real-world education. The faster you make mistakes, the faster you learn and grow. Rich Dad encouraged Robert to create his own learning loop. Take action, make mistakes, analyze what went wrong, adjust your approach, try again, smarter. Robert emphasizes that the rich don't seek perfection, they seek progress. They know that money flows to people who solve problems, and solving problems often comes from failing repeatedly until you find what works. He also explains that failure builds one of the most valuable assets of all, resilience. Once you've been through financial hardships and recovered, you develop the emotional strength to handle bigger challenges. That resilience becomes a permanent advantage in business and investing. The chapter ends with one of Rich Dad's most memorable quotes: "Winners are not those who never fail, but those who never quit." Key takeaway: failure is not something to avoid, it's something to master. Each failure contains a lesson that becomes an asset if you reflect and apply it. The road to financial freedom is paved with mistakes, but those mistakes are the price you pay for experience, confidence, and ultimately, success. In Chapter 9, Robert Kiyosaki uncovers one of Rich Dad's most important lessons. Don't work for money, work to learn. This principle became the cornerstone of Robert's entire financial philosophy, and one of the biggest mindset shifts separating the rich from the poor and middle class. The chapter begins with a story from Robert's early career. After returning from the Marine Corps, he had multiple job offers, all with decent pay. But when he consulted Rich Dad, the advice was surprising. Don't take the job that pays the most. Take the job that will teach you the most. Rich Dad believed that people who focus only on earning money limit their growth. Money is temporary, but skills are permanent, and they compound over time. Rich Dad taught Robert that life is a school, and every job, investment, or business venture is a classroom. The goal is to gain experience, not comfort. Instead of chasing promotions or salaries, he should chase skills like sales, leadership, communication, marketing, and investing. These are the tools that create freedom. Robert explains that most people never escape the rat race because they're trained to specialize too early. They become experts in one narrow field like engineering, accounting, or law, but remain financially dependent on their job. Rich Dad called this the trap of professional security. The rich, by contrast, learn a little about a lot. They understand the basics of business, taxes, finance, and people, and then build systems that multiply those skills. To illustrate this, Robert recalls taking a job with Xerox. It wasn't his dream job, but he took it to learn how to sell. He was terrified of rejection at first, but that experience taught him one of the most valuable lessons in business: how to communicate and persuade. Later, when he started his own company and began investing, that skill became a huge financial advantage. Rich Dad's rule was simple: the more skills you have, the more opportunities you can see. Most people are blind to opportunities because they only know how to think like employees. They know how to earn money, but not how to multiply it. Financial freedom requires a different kind of education, one that comes from real-world learning, not formal schooling. Robert also highlights the power of cross-disciplinary learning. Understanding accounting helps you read financial statements. Studying sales helps you raise capital. Learning marketing helps you attract customers. The more you connect these skills, the more leverage you create in any business or investment. However, Rich Dad warned that learning is uncomfortable. You'll often have to take steps backward financially before moving forward intellectually. Many people refuse to do that because they're addicted to the security of a paycheck. That's why they never grow. Robert ends the chapter with a challenge. Ask yourself, what am I learning right now that will make me financially free? If the answer is nothing, it's time to make a change. Every job or project should move you closer to independence, not just pay the bills. Key takeaway: money comes and goes, but knowledge compounds forever. The rich focus on acquiring skills, not salaries. When you work to learn, not to earn, you build the foundation for financial freedom. Because education and experience are assets that no one can ever take away from you. In Chapter 10, Robert Kiyosaki answers one of the most common questions readers ask. Where do I start? After sharing lessons about mindset, income types, and financial intelligence, he shifts focus to action. The first real step toward building wealth and achieving financial freedom. Rich Dad's response to that question was simple but powerful. Start where you are, with what you have. Most people never begin because they wait for the perfect time, the right job, more money, or better market conditions. But Rich Dad taught that waiting is the enemy of progress. The rich act on opportunities, while the poor prepare forever. Robert explains that starting is more about who you want to become than what you want to do. Wealth is built from the inside out. Before building assets, you must build your mindset. Rich Dad said, money will only make you more of who you already are. If you're disciplined, confident, and focused, money amplifies those traits. But if you're fearful, greedy, or impulsive, money magnifies those weaknesses too. The first step, therefore, is self-assessment. Robert suggests asking 3 key questions. What do I really want? Security, comfort, or freedom? What am I willing to give up or change to get it? Am I ready to learn and take responsibility for my financial education? Most people say they want freedom, but their daily habits prove otherwise. They spend more than they earn, avoid risk, and chase short-term comfort. Rich Dad emphasized that becoming rich starts with making different choices. Choices rooted in long-term thinking. Robert outlines a practical framework for getting started. 1. Start with financial education. Read books, attend seminars, and learn the language of money. You can't spot opportunities if you don't understand how money works. Knowledge reduces fear and builds confidence. 2. Start small. Don't wait for a big opportunity. Begin with small investments or side businesses that teach you how to manage risk. Even a modest real estate deal or stock investment can provide valuable lessons. The goal isn't to make millions right away. It's to start learning how money moves. 3. Build a plan and a team. Rich Dad taught that wealth is a team sport. You need mentors, accountants, lawyers, and partners who understand your goals. Surround yourself with people who are financially smarter than you. Focus on cash flow, not capital gains. Robert warns beginners not to chase fast profits. Instead, invest in assets that generate consistent income, such as rental properties or small businesses. Cash flow is the foundation of financial stability. 5. Take action and keep learning. Every successful investor made mistakes at the start. The key is to learn from them quickly and move forward. Action creates experience, and experience creates wisdom. Robert reminds readers that starting is more psychological than financial. The hardest part is overcoming fear. Fear of losing money, fear of being wrong, fear of change. But fear is also your greatest teacher. Rich Dad told him, if you're not afraid, you're not growing. The chapter closes with encouragement. You don't need a lot of money, luck, or connections to begin. You just need a clear reason and the courage to take the first step. Once you start, momentum builds, and every decision brings you closer to financial freedom. Key takeaway: the best time to start was yesterday. The next best time is now. Begin with what you have, focus on learning, and take small, consistent steps. Wealth doesn't start with money, it starts with mindset, courage, and action. In Chapter 11, Robert Kiyosaki introduces one of the most strategic principles of wealth creation. You can't become rich alone. To retire young and rich, you must learn how to build and lead a strong financial team. This chapter shifts the focus from individual effort to collective intelligence. The idea that success multiplies when you surround yourself with people smarter than you. Rich Dad often told Robert, "Business and investing are team sports." Most people, however, try to play the game alone. They manage their own finances, do their own taxes, and make investment decisions without expert guidance. As a result, they struggle and make avoidable mistakes. The rich, on the other hand, understand that wealth grows faster when you build a network of professionals who compensate for your weaknesses. Robert explains that his financial team didn't appear overnight. It evolved as he grew. In the beginning, it was just him and Kim. But as their investments expanded, they needed experts, people who could help them structure deals, reduce taxes, and manage risks. Over time, their team included an accountant, attorney, banker, broker, real estate agent, and property manager. Each person brought specialized knowledge that made their money work more efficiently. Rich Dad taught Robert that there are three types of people in the financial world. Those who work alone, they do everything themselves and usually stay small. Those who work with smart people, they grow faster because they leverage other people's knowledge. Those who build teams that work for them, they become leaders, and that's where the real wealth is created. The key, Rich Dad said, is to know enough about money to lead your team effectively. You don't need to be the smartest person in the room, but you must be educated enough to ask smart questions and make informed decisions. Leadership is not about control, it's about coordination and trust. Robert shares how he used his financial team to create leverage in multiple areas. His accountant helped him legally reduce taxes and increase cash flow. His attorney protected his assets through proper legal structures. His banker provided access to capital and financing for investments. His broker and real estate agent brought him opportunities and market insights. Together, these relationships allowed Robert to scale his wealth much faster than if he had operated alone. He emphasizes that your financial team reflects your mindset. If you think small, you'll attract small players. But when you act like an investor and entrepreneur, professionals begin to treat you like one. The way you show up, your vision, confidence, and willingness to learn determines the quality of your network. Rich Dad's advice was clear. Don't try to be a jack of all trades. Be a master at building teams. The poor and middle class focus on doing everything themselves. The rich focus on finding and managing people who can do it better. Robert also warns against one common trap: hiring advisors without understanding their incentives. Some professionals only care about commissions or fees. That's why you must stay financially educated and make decisions based on your goals, not theirs. The chapter closes with a reminder that great teams grow from great relationships. Respect, integrity, and clear communication are the foundation of trust. When your team knows you're serious, ethical, and committed, they'll help you achieve your vision faster. Key takeaway: financial freedom is a team achievement. Don't try to go alone. Surround yourself with skilled, trustworthy professionals, stay financially literate, and lead your team with clarity and purpose. Wealth grows exponentially when you learn how to leverage other people's expertise and energy. In Chapter 12, Robert Kiyosaki explains that before you can become rich in reality, you must first think and act like a rich person. This chapter dives into the psychology of wealth, the mindset, beliefs, and habits that separate the rich from everyone else. Rich Dad often reminded Robert, money doesn't make you rich, your mind does. Robert begins by highlighting a crucial difference between the rich and the poor: how they think about money and opportunities. The poor say, "I can't afford it." The rich ask, "How can I afford it?" That simple shift turns limitation into possibility. The poor use money as an excuse. The rich use it as motivation. Rich Dad taught Robert that wealth starts in the mind long before it appears in the bank. If you think small, you'll act small, and your results will stay small. To change your financial situation, you must first expand your mindset. That means replacing fear with curiosity, doubt with action, and excuses with responsibility. Robert explains that every person carries two voices in their mind, when it comes to money. The fearful voice and the rich voice. The fearful voice says, don't risk it. What if you lose? The rich voice says, what can I learn from this? How can I make it work? The voice you listen to determines your destiny. Rich Dad told Robert that the rich are not fearless. They simply train themselves to act in spite of fear. To think like the rich, you must also learn to see opportunities others overlook. Most people only see problems, debt, taxes, competition, but the rich see possibilities hidden within them. For example, during economic downturns, the poor panic while the rich invest. Robert learned that your financial success depends less on market conditions and more on your ability to think creatively under pressure. Another crucial point in this chapter is the difference between reactive thinking and proactive thinking. Poor and middle-class people react to life. They wait for the economy, government, or company to improve their situation. The rich act first. They create businesses, invest in assets, and make things happen. Rich Dad's rule was, don't wait for opportunity, build it. Robert also addresses the importance of habits and daily behavior. Rich thinking means acting on your goals consistently. The rich read about money, study investments, and spend time with other successful people. They treat their mind like an asset, constantly upgrading it through education and experience. Meanwhile, most people waste time on entertainment or gossip, habits that keep them poor. Rich Dad introduced Robert to a mental formula. Be, gives, do, gives, have. Most people think the opposite. They want to have money first, then do something successful, and finally become rich. But the rich understand that you must first be the kind of person who thinks, acts, and makes decisions like a rich individual. Then you do the right actions, investing, learning, building, and only then will you have wealth. Robert concludes the chapter by emphasizing that financial freedom isn't a destination. It's a transformation. The moment you start thinking differently about money, opportunities, and yourself, you begin moving toward freedom. Key takeaway: your financial life is a reflection of your mindset. To become rich, you must first think and act like the rich. Take responsibility, embrace learning, manage fear, and see opportunity where others see risk. The outer world of wealth always follows the inner world of thought. In Chapter 13, Robert Kiyosaki presents a powerful truth that often goes unnoticed in the pursuit of wealth. The fastest way to become rich is to help others get what they want. This chapter focuses on how generosity, value creation, and service form the foundation of lasting financial success. Rich Dad taught Robert that the poor and middle class often think about money in terms of scarcity. They focus on getting. The rich, on the other hand, focus on giving, specifically giving value. Money, Rich Dad said, is a byproduct of solving problems. The more people you help, the more wealth flows back to you. Robert explains that this principle changed the way he approached business and investing. Early in his career, he was focused on making money for himself. But his rich dad challenged him to shift his mindset. Stop asking how you can make money. Start asking how you can serve more people. That simple switch led to a new level of creativity and abundance. The idea is rooted in leverage. You can only work a limited number of hours, but your ideas, products, or investments can help thousands, even millions, of people simultaneously. For example, when Robert created the cash flow board game, his goal wasn't just to sell a product. It was to teach financial education in a fun way. The more people he educated, the more income he earned. The wealth followed the value he created. Rich Dad often repeated this formula. Wealth equals value times leverage. If you want to grow your wealth, increase the value you offer and the number of people you reach. This means focusing less on short-term profit and more on long-term impact. Robert also contrasts two mentalities: the employee mindset and the entrepreneur mindset. Employees think, if I work harder, I'll earn more. Entrepreneurs think, if I help more people, I'll earn more. The first approach limits income to personal effort. The second multiplies it through systems and service. Another key insight in this chapter is about trust and integrity. Rich Dad told Robert that wealth built on manipulation or greed doesn't last. True wealth grows through reputation and relationships. When people trust you, opportunities flow naturally. In business and investing, credibility is a priceless asset. Robert gives examples of how this principle shaped his partnerships. He always looked for win-win deals, investments or ventures where everyone involved benefited. By focusing on mutual gain, he attracted strong allies and long-term success. He also discusses the emotional side of giving. Many people operate from fear, afraid there's not enough money, success, or opportunity to go around. But Rich Dad taught that money flows toward those who believe in abundance. When you help others succeed, you expand your own opportunities. Robert encourages readers to look for ways to serve through teaching, creating jobs, building businesses, or improving lives through products and services. Every act of contribution plants seeds for future wealth. He concludes the chapter with Rich Dad's timeless reminder: if you want to be rich, focus on becoming valuable. If you want to be poor, focus on earning. The people who consistently give value, not because they have to, but because they choose to, are the ones who ultimately achieve freedom, influence, and wealth. Key takeaway: true wealth is built through service. The rich don't chase money, they create value, solve problems, and help others grow. When you focus on contribution instead of consumption, money becomes the natural result of the positive impact you make. In Chapter 14, Robert Kiyosaki lays out a practical roadmap for achieving financial freedom within a decade. A 10-year plan based on the principles he and Kim used to go from broke to financially independent. This chapter transforms Rich Dad's lessons into a clear, actionable framework that anyone can follow if they commit to the process. Robert begins by reminding readers that financial freedom is not an overnight event. It's a gradual transformation, mentally, emotionally, and financially. Most people overestimate what they can achieve in 1 year, but underestimate what they can achieve in 10. The key, Rich Dad taught, is consistency and focus over time. Robert outlines 3 core stages of the 10-year journey. Stage 1, build your foundation, years 1 to 3. This stage is all about education, discipline, and mindset. Before you can handle wealth, you must learn how money works. Rich Dad told Robert, you can't build a skyscraper on a weak foundation. In these first years, focus on improving your financial literacy, read books, take classes, attend seminars, paying off bad debt and managing your expenses, building the habit of saving and investing, even small amounts, shifting your mindset from employee thinking to investor thinking. Robert emphasizes that this is when you'll face the most internal resistance, fear, doubt, and impatience. But every new habit you build here becomes the foundation for future wealth. Stage 2, build your assets, years 4 to 7. Once your mindset and habits are in place, the next step is to acquire and grow income-generating assets. Rich Dad taught that assets are the engine of financial freedom. During this period, focus on buying or creating small income streams like rental properties, small businesses, or side ventures, reinvesting profits to grow your portfolio, learning about leverage, using other people's money OPM and other people's time opt to scale your results, building your financial team, accountants, lawyers, bankers, and advisors who support your goals. Robert explains that this is when momentum starts to build. Your money begins working for you. Even small streams of passive income, when compounded, create freedom faster than most people expect. Stage 3, achieve and expand freedom, years 8 to 10. By this stage, your passive income should begin to exceed your living expenses. That's when you officially reach financial freedom. But Rich Dad warned, don't stop there. Use your freedom to expand your influence, help others, and continue learning. This phase focuses on protecting your assets through smart legal and tax planning, mentoring others or creating systems that give back, continuing to invest and innovate to stay ahead of financial changes. Robert stresses that wealth without purpose leads to emptiness. True freedom means doing what you love, not just having money. Throughout the chapter, Robert returns to a core idea: the journey to freedom is not about speed. It's about direction. Every small decision you make today compounds over time. If you stick to your plan and keep learning, 10 years is enough to change your entire financial life. He also warns that most people fail not because the plan doesn't work, but because they quit too early. The discipline to stay consistent through ups and downs is what makes the difference between dreamers and doers. Key takeaway: financial freedom is built over time through education, consistent action, and patience. If you commit to learning, investing, and growing for 10 focused years, you can escape the rat race and live life on your own terms, just as Robert and Kim did.